All right, we're back with you, and we're going to take another look at our market action now that we've been trading for about 45 minutes. And let's take a look at this corn board here with our quotes provided by Bar Chart. On the corn, we are still trading a little bit higher. We have December now 9 1/4 higher at 673.5, within roughly about a penny of our high of the day so far, pushing a dime gain here. Soybean trade going the other way. We have November down 11 3/4 cents at 14.49.5 after a high last night of 14.60 3/4. But it has come off of its earlier low today by almost a dime. It's off of that by about 9 cents right now, so keep that in mind. All right, let's move over to wheat. In Chicago, December actually gaining ahead of steam here now, and now we're 14.5 higher at 8.19 3/4, and that's off of its earlier low, which was at 7.94 1/4. So look at that. We're about 26 cents off of that right now. Let's see if Kansas City can follow suit here this morning. So far, December is up 11 1/4 at 8.93.5, and that would be 23 cents off of its earlier low. Okay, on to spring wheat we go in Minneapolis. December 8.5 higher at 9.18 per bushel. And we'll check out the cotton. New crop December down 108 points at 116.60 per pound. So the cotton kind of getting the short end of the stick along with the soybeans today. I want to welcome aboard Chris Swift of Swift Trading based here in Nashville. Good to have you with us.
Good morning.
Choppy market today, a little strength in the corn and the wheat starting to show its stuff now.
It is. There's a lot of discrepancies to have to overcome between last Friday's Pro Farmer bushels per acre yield versus USDA's. And so I believe going forward, we're going to consistently be having to hash that out. And then the wheat market, because corn's higher, protein becomes a big factor again now when we talk about feeding. And with corn looking like it's probably going to go higher here with these results from Pro Farmer, now wheat has a little bit of a play back into it again from feed source.
Well, the dollar this morning was a little bit weaker, and let's see if it's still that way. On the U.S. dollar index value, yep, we're down 261 points at 108.490. So that would be supportive to the wheat, you would think.
Well, a little bit. Those are new contract highs, though, in that dollar. So it's just barely off the top a little bit. Sorry about that. But yeah, it's not going to hurt any. We'll put it that way.
Well, when you look at the corn, though, I mean, yes, it's trading stronger, and yes, we had a positive end result from that Pro Farmer crop tour, but I've heard numerous stories of guys already hitting the field, starting to pick corn.
Oh, absolutely.
How can you rally corn if harvest is already starting?
Well, I think it's easy. We're not really concerned about where it is today. We still have ample supplies on hand for today. We're more concerned about this time next year. And if we look at the September contract months, carrying still just a very slight premium to the December, and then especially in beans and soy meal, where they're carrying significant premiums on the front end, it's all about running out of product before this new crop gets in. And that's what we're concerned about this time next year, not right now.
So I'm almost thinking of like a diesel engine. If you get like air bubbles in the fuel line,
right,
it loses its prime or something. Is that kind of what you're talking about here?
And it can be, because we saw that during the summer. But nothing changed in the corn crop whatsoever all year. Very little bit of the aspects improved for corn, yet we dropped $2. So we're going to get those air bubbles in there, but I think the air bubbles will be very few and far between on this move up in corn.
Are you optimistic on the wheat market now or not?
I'm a little friendly towards it. Seeing still where we got the dry areas into the wheat belt there, and we know we're coming up on winter wheat seedings here before too long. So as long as it stays dry out there, and now with the importance of corn moving higher and that protein content for the wheat being quite a bit more than what the corn is, then we just see which is the cheaper protein source to feed.
Now they're back to that arm wrestling thing with corn again.
For a long time.
Yeah, that's a good point. All right, we'll come back in a moment and we'll take another look at our livestock trade here on a Monday right after this. All right, we're back with Chris Swift of Swift Trading. He's based in Nashville. Quick question to you here. When you, and I know you observe the cattle market and the industry as a whole. We had some rain in the southern plains here recently, but is that going to have a delayed impact here on the cattle industry as far as the marketing goes?
I don't know that it'll have much impact on it at all. I think any rain that we get right now might be in for some winter wheat grazing. So I think that you would like to see, it'd be a little bit difficult to get the grass up and growing, but you could get a rye or a wheat crop out there that would come up enough to graze through the winter. So I don't really think it had any impact on what we're doing right now in the industry. And my best belief is the packer margins are fairly wide still. They're going to try to maintain that as best as possible. Still 11.24 million head on feed. We got plenty of cattle on feed, and we haven't slowed the cow kill down any. So it's still moving.
You know, we heard last week that because of the rain, a lot of producers in the Southern Plains were actively sowing wheat already just to try and get something up so they can graze it.
Right.
Is that going to increase the nearby demand for the feeders?
No, it will only be calves. You would probably, something to just come, something coming off their mama to get them kind of adjusted to the grazing part of it. But no, I don't think it'll impact the feeder cattle market at all. The feeder cattle market is going to be impacted by what fats do, and fats are going to be impacted by whatever the consumer does.
Okay, so let's take a look at the market as it stands right now. We'll go to the big board here on the live cattle trade. Well, here you go, Chris. You talk about a lackluster trade. October, we'll go with that. It's down 22 cents at 142.82. December down 40. The far out deferreds February and April a little over 50 cents lower. Now, this feeder cattle market that we were just talking about, boy, they're pounding on it today. Look at September down $1.95. You have October down $1.70. It's at 181.70. So it had been as high as 182.90, and then the wheels quickly came off of that thing. We're about $1.25 off of that now. Why would that be?
Well, I think the index, the index had been rising all week last week, and then index is a 5-day weighted average. So every day that is increased to it, they drop another one, and it's kind of slow. The futures market are instantaneous, and I think if you'll watch, you'll start to see that basis turn that has been negative for months on end. Now it's starting to turn positive in there. It's giving fewer people an advantage to be able to market that inventory out into the future at a higher price.
So let's take a look at lean hogs, and right now everything a little higher. We have October now up 67. Look at that, 91.32. December 50 cents higher. We're at 83.45. So pretty solid gains all across the lean hog trade as we get rolling here on a Monday. Thank you, Chris, for coming in.
Always
Good to
a pleasure.
see you again.
Yes, sir.
I appreciate that very much. Chris Swift of Swift Trading. Janet, I'll turn it back to you.